how do you think a cash rate cut, RBA, will affect the Melbourne market? So for those of you who weren't following along earlier today, so unsurprisingly, rates were put on pause again. And I guess the data is showing that we're kind of now in the range. We're not quite in the range when they take out the add backs, mainly through electricity. Employment still looks pretty solid, but inflation is still trending down. GDP's kind of just being pumped up by migration in terms of per person. We're technically still in a bit of a recession there. But I think we won't really see any rate cuts until we get to February would be I think the first one will come. I think they just want to keep playing out and see, and she did allude to it today that they're trying to see how much the tax cuts will wash through the economy, because they didn't really land to July, and that's kind of it's a bit of a trickle effect to watch that stuff flow through. But I guess how it'll affect the Melbourne and the Sydney market. So historically speaking, Melbourne and Sydney are two markets that move very heavily. Their growth is tied to serviceability. So if you see interest rate hikes, that means people's serviceability comes down. And over the last couple of years, we've seen people lose kind of around that 40% of serviceability of their borrowing. And that has essentially seen Melbourne and Sydney not really move the needle too much in terms of growth. Now, I guess what's happened in those markets, particularly Melbourne, it's cooled down in terms of its pricing. It's seen its rental market push really, really strongly. But when we get those rate cuts, particularly here in Melbourne, it's going to bring that serviceability back to a lot of people. And it's also going to help, navigate that cash flow management when you're taking on an investment with a slightly lower yield. So I see that being kind of a really big, so we've got two ticks there, and the third one will just bring confidence back into the market, because one thing that has been happening really heavily in Melbourne, so it went through a bit of a lull period there during that kind of elongated lockdowns here in Melbourne, where you got internal and you got external migration. So internal migration is people traveling from that state into another state within the country, and external is people coming from outside of Australia. So during that COVID period, a lot of people that were in Melbourne were actually getting out. They were going to Queensland, they were going over to WA, and they were doing kind of everything to try and get out of the lockdowns. Now, what has happened since then, we're actually seeing that reverse. So now Melbourne's really pushing ahead in internal migration. They've always been really strong in external migration and population growth. They're going to be the number one. I think over the next few years, they're projected to have 300,000 more population growth than New South Wales. So that's really, really significant in terms of volume. So I think you're just going to continue to see that drives affordability, drives cash flow management, drives serviceability, and that population growth is just creating a lot of supply pressure. So I'm very, very pro Melbourne. If you asked me a few years ago, you would have got a vastly different answer. Now, and I guess going into those rate cuts as well. So the big four are already, factoring in some significant rate cuts. So ANZ's factoring in about 0.75%. So ending the year at 3.6. Westpac, CBA, and NAB, they're around that 1 to 1.25, and you can see nearly all of them. They're all saying February 2025 is when they're kind of anticipating the first cut. So if someone was considering getting into Melbourne, I'd be trying to get in before that rate cut lands. Historically speaking, this time through to around mid-January, particularly the last 2 years from my personal observations, has been the best time to be buying property. You've got everybody else that's distracted in terms of they're trying to wrap up their work year, they're trying to get through Christmas shopping, school holidays, whatever it might be. So you've got far less competition in the market than you typically have. But what you'll find is when you come back towards the end of January, everybody's refreshed, everybody's kind of sorted out their life goals, what they want to work towards, whether it be through property, finance, whatever it might be. You're going to have all these motivated buyers coming back into the market. And if those rate cuts come in February, it's just going to put a little bit of a fire up there behind to really get them moving into the market as well. So there is kind of extra motivation for people looking to buy at the moment. I'd be trying to get it done well before that February rate cut comes through.